My name is Tom Davies and I'm the Investment Director at Seedrs. Seedrs is a revolutionary online platform for investing in startups. Through our platform, investors can raise anywhere between £10 and £100,000 in startups that they choose, and startups can raise anywhere up to £100,000 in equity capital through their friends, family and the crowds. These are our top 5 tips for startups looking to raise money. Creating milestones. Entrepreneurs, rather than setting one large goal far off in the future, should create several smaller milestones which need to be reached. By setting milestones, this enables businesses to work out how much money they need to raise in order to take their business to the next level, as well as creating attainable, realistic goals by which you can gauge your progress. Work out how much money you need to raise. Rather than approaching fundraising by saying, let's see how much money we can get, you should actually work out how much money you need to raise in order to reach the next relevant milestone. An investor will have a lot more confidence in an entrepreneur that has a clear idea of what needs to be done and how much money is required to get that done. Be realistic about how much equity investors will expect to receive in your company. Investors will usually expect to receive anywhere between 20 to 40% in exchange for the first £50,000 to £100,000 of investment. Investing in startups represents one of the highest risk investments. While we know that these investments present a tremendous opportunity for investors, there are still a lot of problems to overcome, a lot of work to be done, and a lot of risks to be addressed. And the value that you place on your company at this very early stage must reflect this. An idea on its own does not have a lot of value. A great idea is only 5% of the battle. It needs an idea to be executed in a great way in order to create value. Remember that investors will be looking at not just the idea, but the people behind the idea to work out whether they think that that team will execute that idea and make a valuable business out of it. In addition, great entrepreneurs often share their ideas freely. If you're too precious about your idea, you're probably doing something wrong. It's important to remember that the opportunity for collaboration is far, far greater than the risk of competition. Research. Research, research, research. Research is absolutely key. An entrepreneur should be prepared to answer detailed questions about its business, the market it's trying to enter, and the hurdles that it thinks it's going to have to overcome. A well-prepared and knowledgeable entrepreneur will instill confidence in investors that they know how to achieve a successful business. In addition, research will also enable the entrepreneur to set very, very accurate and clear milestones which need to be reached, and will also identify which problems will need to be overcome in order to create a very successful business.